Let's bring in Don Kohn, former vice chair of the Federal Reserve and senior fellow in the economic studies at the Brookings Institution. Good afternoon to you. Great to see you. What do you feel about this data? Does it change the likelihood of a decision next week, or were we already set for no change in the interest rate?
Well, I think if anything, it reinforces their judgment that they've got policy in a good place, as Chairman Powell says, to support the continued good growth in the economy with very contained inflation. Great jobs growth. They certainly don't need to ease to help the labor market. It's doing great all by itself. And wage growth has been a little higher, but it's not really accelerating despite this very low unemployment rate. And inflation is below their target. So they've got no reason to change, and this will just reinforce their judgment.
As you look at these jobs reports, seeing 266,000 jobs is an awful lot for an economy that has a pretty tight labor market. How much longer can we continue to add jobs at these numbers? And if we start to slow down, do we need to be reminded that that's okay? We're almost here near full employment.
Well, Courtney, I agree with you. I think it's unsustainable to continue at this pace, 200,000 last 3-month average. I think the steady state pace of increase drawn from the demographics of the United States is closer to 100,000. But I would also admit that I've been saying that for some time, and it has been sustained and it has been sustainable, and it hasn't really pushed up inflation. So I think it can't go on forever. At some point, the pressure on worker availability will drive up costs and wages, and that'll feed through to prices. But I think it's going to take a while before we see that.